Well, enthusiasm over Trump's policies has had half of all the U.S. ETFs at all-time highs, and the other half are within a 1% of their high. Now, one of the best sectors, Eric, of course, and this is Eric Balchunas, Bloomberg intelligence strategist for ETFs. One of the best sectors, the best sector out of the election is the financials, the banks. But ironically, and this is a bit of a pullback that we have today, it's the worst drag. What's going on here and what's ahead?
Sure, it's the high flyer. This is a craze. It reminds me of low vol last year. If you look at the financial sector ETFs over the 3 months since the election, they've taken in $13 billion. But here's the thing, 40 of the 50 of them have taken in money. That's a deep, deep thing. You don't see that often. And you look at which ones are taking the money, obviously XLF, that's the one most people run to. However, what's driving all this is banks. XLF has a lot of stuff in it, but bank ETFs are really the white heat inside of all this. KRE is the best performer. That's the regional bank ETF that Spider has. It's up 25% since the election. That's 10% more than Russia even. So this is a hot ETF. The thing with this one is regional banks are benefiting from possible deregulation, but really from rising rates. If rates go up, these would benefit greatly. It's a very volatile ETF. You tend to have volatile ETFs go up the most in a rally and then go down the fastest. So this is a little bit of a live wire, but that's the one to go to, and it only has a 10% overlap with XLF. I think a lot of people would find that surprising, but not many regional banks in XLF.
Interesting. So a little bit of Newton's second law, what goes up must come down. As for the dollar, something interesting here, Eric. It is up since the election about 3%, the Bloomberg Dollar Index, but on the year down about 2%. What are the dollar ETFs telling you?
Yeah, that was supposed to be a sure thing. It's kind of shaky. UUP is the PowerShares dollar ETF. The thing with dollar ETFs is they're not that popular. I think retail investors probably don't really play currencies, and institutions use the currency market, directly. But what am I shorting, right? So UUP is long the dollar, short the euro and the yen, only developed market currencies. In fact, 57% of the short is the euro. So that's really what you're doing. USDU is another product from WisdomTree that shorts a wide basket of currencies, including emerging markets. And that's down a little more because some of the emerging market currencies haven't done well. So point is, if you're using a dollar ETF, make sure to find out what it's shorting, because the dollar is only relative to other currencies.
And quickly, home builders. There was a bit of a disappointing print for new home sales in the month of January. Some are saying it's a Trump tantrum, as rates have gone higher. It's really affecting mortgages. What are you seeing relative to home building ETFs?
Look, they've taken in flows. They're also as high as they've been since 2007. It's unbelievable because immigration policy could arguably be bad for home builders. Rising rates could be bad, but they just seem to be bucking this. And I think they're representative of the sugar high. If you're just buying everything that's equities, and that's what you're seeing here, and ITB is the one that's the purest play. It holds mostly just pure home builder stocks, but the P is looking pricey at 19.